We talk a lot about Bitcoin and, how volatile it can be. I mean, going up like crazy and then, dropping down. It's definitely a roller coaster ride.
Yeah, for sure. Those price swings can be pretty wild.
Yeah. So it kind of makes you think, I mean, what if those times when Bitcoin drops, what if those are actually like opportunities?
Interesting. You're talking about like profiting when the price goes down, right?
Yeah, exactly. So today we're going to go deep, really deep into how you could potentially, make money when Bitcoin takes a dip.
I like it. Flipping the script a little. It's
Yeah.
a different way of looking at things.
Totally. So we've been looking into this, and there are actually a bunch of different ways to try and make this happen.
Hmm.
It's actually a surprising number of strategies.
That's true. There are quite a few approaches out there, and I think it's important to understand that the ability to kind of bet against Bitcoin, it actually helps the whole market work better.
Okay, how so?
Well, it allows people to express different opinions about where the price is headed. So, more points of view, a more balanced picture, and that can help, make the market more efficient.
Gotcha. So let's start with, I guess, the most well-known way to do this, shorting Bitcoin. Can you break that down for us? I mean, what exactly does it mean to short Bitcoin?
Sure. Shorting Bitcoin, or really short selling anything, it's basically, you're betting that the price is going to go down. So instead of buying low and selling high, you're selling high and hoping to buy it back lower.
Okay. So like in our research, they use this example. It's like you're selling Bitcoin that you don't even own yet, right?
Yeah, exactly. You borrow it, sell it, and then hope to buy it back cheaper later. That price difference, that's where you could make a profit.
So how do you actually do that? I mean, what are the actual ways to short Bitcoin?
Right. So there are a few methods. One that's really common is using something called contracts for difference, or CFDs.
CFDs. Okay. I've heard that term thrown around.
Yeah. They're basically like agreements where you can speculate on the price of Bitcoin, but you don't actually own the Bitcoin itself.
So like betting on which way the price will go.
Exactly. You're just focused on that price movement. So if you think the price is going to drop, you'd open a short CFD position. And if you're right and the price does drop, you make money based on that difference.
What about leverage with CFDs? Our research mentioned that.
Right, leverage. That's a key part of CFDs. It basically lets you control a larger position with a smaller amount of your own money. For example, they mention you could start with just 100 euros.
100 euros, wow.
Exactly. But, and this is crucial, leverage amplifies both your gains and your losses. So if the price goes against you, it can hurt a lot.
So high risk, high reward kind of thing.
Yeah, you could say that. It's definitely not for the faint of heart. You got to be comfortable with the possibility of losing some or even all of your initial investment.
Gotcha. So CFDs are one way to do it. What else is out there?
Well, another option is using exchange-traded funds, or ETFs. But not just any ETFs. We're talking about short Bitcoin ETFs, which are designed specifically to make money when Bitcoin's price goes down.
So instead of, the usual ETFs that track Bitcoin's price, these go the opposite way.
Right. They actually use these things called derivatives, which are basically financial instruments that, their value is tied to Bitcoin's price. So when Bitcoin goes down, these ETFs aim to go up.
Makes sense. Our research gave us a few examples. There's the ProShares Short Bitcoin ETF, the ticker's BETO.
Yep. BO, it tries to give you the opposite return of Bitcoin's performance for that day. So if Bitcoin drops 1%, BETO should, in theory, go up 1%.
Okay, then there's the Direction Daily Bitcoin Bear 1x Shares, BTCS.
Right. Similar idea to BO, it also wants to mirror the opposite of Bitcoin's daily price moves.
So both of those are tied to the daily changes in Bitcoin's price.
Exactly. And then there's the ProShares Ultra Short Bitcoin ETF, UCO.
Ultra short, that sounds intense.
It is. It tries to deliver double the inverse of Bitcoin's daily performance. So if Bitcoin falls, UCO could go up, like way more than a regular inverse ETF would. But of course, if Bitcoin goes up, well, you could see bigger losses too.
So ETFs offer a way to bet against Bitcoin, but you're actually buying and selling shares, right? Is that like a simpler way to do it than CFDs?
It can be. Buying and selling ETF shares is pretty straightforward, but remember, ETFs have fees, and also they might not perfectly mirror Bitcoin's price over longer periods, because of how those derivatives and daily compounding work.
Right, right. Okay, so we've got CFDs and ETFs. What about those other things we mentioned, futures and options? What are those all about?
Okay, so futures, those are contracts where you agree to buy or sell Bitcoin at a specific price on a specific date in the future. And to short Bitcoin using futures, you basically agree to sell it at that future date. If the price goes down, you can buy it cheaper on the market and then sell it at that higher price you locked in with the contract.
Interesting. And that's something institutional traders use a lot for hedging, right?
Exactly. They use it to manage their risk if they own a lot of Bitcoin. But it can also be used for speculation, to try and profit from price drops.
Gotcha. And then there are options, specifically put options.
Yeah, put options give you the right, but not the obligation, to sell Bitcoin at a certain price called the strike price by a certain date. So if you think the price is going to fall below that strike price, you buy the put option. And then if you're right, you can exercise your option and sell at the higher strike price, even though the market price is lower.
So it's like you're locking in a price to sell at, even if the market goes down.
Exactly. Or you could sell the option itself if its value has gone up because the price of Bitcoin dropped.
So lots of different ways to potentially make money when Bitcoin goes down, but at the core of it all is this idea of short selling. What are the big pros and cons of this whole short selling thing?
Well, the biggest pro, it's right there in the name. You can profit when the market's going down. That's pretty powerful, especially with an asset like Bitcoin.
Yeah, Bitcoin can be really unpredictable.
Yeah, so if you're right and the price drops, you could make some serious money. And it also lets you, diversify your investment strategy. You're not just relying on Bitcoin going up all the time.
Right, but what about the risks? This has got to be a risky strategy.
Oh, absolutely. The biggest risk, they call it upside price risk. And basically it means your potential losses are unlimited. Because you're borrowing Bitcoin to sell it, if the price goes up instead of down, you have to buy it back at that higher price. And there's no cap on how high Bitcoin can go.
So unlike buying and holding where, the most you can lose is what you put in.
Exactly. Short selling has that unlimited downside risk.
Gotcha. Anything else to keep in mind?
Definitely. You really need to understand the financial markets. Short selling is not for beginners. You have to be able to analyze trends and make accurate predictions. If you get it wrong, well, you could lose a lot.
So to wrap up, we've seen that there are all these different ways to potentially profit when Bitcoin's price drops. Things like CFDs, ETFs, futures, and options.
Lots of tools in the toolbox.
Yeah. But they all revolve around this central idea of short selling.
Yep. Short selling is the core concept here.
And while it can be really profitable, you could make some serious money if you're right. There's also a lot of risk involved.
For sure. You could also lose a lot of money. That potential for unlimited loss, that's a big deal.
Absolutely. So the bottom line is, if you're thinking about shorting Bitcoin, you really need to do your research, understand the tools, and have a solid plan, especially a plan for managing that risk.
Could not agree more. And I think, it makes you think. Bitcoin, with its crazy ups and downs, and now we have all these tools to bet on those downs. What does that tell us about how digital assets are evolving and how we might need to start thinking about their value in the future?
Really interesting question to ponder. Thanks so much for breaking all this down for us.
My pleasure.
And thanks to you, the listeners, for joining us on another deep dive.